If we jump over to the Amber Data platform, yeah, here we go. Jump over there. We can see that, the realized vol, they use the Parkinson realized vol, which kind of factors in the highs and lows. So that was coming in the sort of 40 level, but has jumped to about 52 in the recent sort of spike. So a decent move there, up in vol on the way up. So the fact that we're seeing vol up on the way up is bullish in itself. Implied vols were higher as well, but not really keeping pace. If you look at Ethereum, we were at 55 realized, and we are at about 60 as we speak. So also higher, but not to the same extent. And then at the money vols, also similar sort of story. If we look at carry, we've got negative carry of about 8 vols in Ethereum and about 5 vols in Bitcoin. Looking at term structures, you can see they have shifted higher. Let's scroll up here. You can see led by the front end, we've got about a 5 vol pop in that election bucket, maybe 2 vols in the back. And then Ethereum back end actually offered. And then front end is a little bit higher, a couple of vols. And then that weekly stuff for the 18th this week is up nearly 10 vols in each asset. You see this big forward vol spike up at 72 and up at 69 here. So you look at kind of how much that forward vol jumps. We go from like 48 up to 69. We go from kind of 51 up to, so about a 20 vol point jump in the forward vol. That's your big event bucket for the election. Market anticipating some sort of 10% type move for the elections. We shall see if we get it. So, another chart that I quite like, got Solana on here, but another chart that I quite like is this one from Amber Data that I actually asked them to create for me. It's basically, what we're doing is we're looking at the implied moves and the actual moves, right? So the band, the kind of dotted bands show us what the implied move is based on the vol, and then if we actually smash through that implied move or not. So you can see as the rally begun, we did smash through on the upside there, and then again we smashed through pretty materially there. So it's been quite hard going for the gamma sellers, as we have been really on the upside. We've been breaching those implied moves quite dramatically. Okay. Middle East headlines have taken a bit of a backseat recently as well, as Israel plans its response to Iran. that was keeping risk sentiment somewhat on edge, but that has gone down recently. Obviously, that can come back at any point, but for now, the market doesn't seem to be very focused on that. Looking at the kind of open interest per expiration, you definitely see that October has got a spike here, but then you don't have massive open interest on the November buckets. So actually December is quite clearly, obviously it's calls, we're looking at 60,000 calls versus only 25,000 puts in December on Bitcoin. And then look at how dramatic the increase is in Ethereum. December Ethereum 460,000 options versus 120 there. So whilst October is a reasonably big expiry, once that's gone, a lot of the action, it does reside in December, which I found interesting that you haven't really seen too much volume building up in the November buckets. Looking at the time series of what the vols did, you can see the 1 week vol, as usual, kind of dipping into the weekend and then bouncing pretty strongly out of it. That's pretty typical. We do see that seasonality quite often, both in Ethereum and Bitcoin. Okay, switching gears to skew. If we move it over here, so this is the skew term structure that I quite like looking at skew in this way. It kind of gives us a flavor of where the market perceives the tail risk over different time horizons. So we've seen a flattening of that skew, which means we've gone, if we look at the blue line, we're in call premium across the whole curve, whereas a month ago we had a put premium. We have started to see longer dated calls coming down, shorter dated calls coming up. The curve's looking quite flat now. Ethereum, longer dated calls kind of holding their value, but short dated calls flipping from puts into calls as well. So a much flatter term structure of skew is basically saying that the market's getting bulled up on all time horizons right now, as we have started to move up quite aggressively. And so people are willing to pay a little bit of premium for calls across the entire curve. Now, I do still think downside convexity is cheap, But the truth is, now that we've broken those key levels on Bitcoin, it's not something you really need to really worry too much about in the near term. Like if we rejected 66K and went back down again, and you were fairly quick to react, then you could probably do something with that, right? But right now, I think running relatively light hedges is okay, because if we do finally get this break, then you kind of want to run the longs a little bit, right? So that's what it looks like. But if you were looking for some crash protection for whatever reason, then I think downside, selling those put ratio back spreads that we've done historically in our portfolio has worked quite well. Like I did those put ratio back spreads as a hedge. Market ripped higher and I actually made money and unwound it this week. So that was quite nice. Okay, so relative value wise, we've got ETH Bitcoin cross rate back to the lows, but it's not accelerating lower. It's just kind of drifting back to the lows. It's very hard to get bullish on that chart. If you look at that chart, I mean, it looks pretty horrible. There is some argument that, maybe it is coiling a little bit. And the volatility is compressing as we go back down to those lows, and you may be getting a bullish divergence on momentum. But given that Bitcoin seems to be the one that has the political catalyst, hard to get excited about Ethereum right now. The vol spread is also agreeing with that sentiment. So you can see a month ago, it was closer to 10 vols. A week ago, it was like 6 or 7. And now it's down to 4 vols in the front. So we have seen a compression of the vol spread, as I had been anticipating for months now. We have got that. I said if the vol spread got back to 5 vols, then I would probably not want to stay short Ethereum vol relatively anymore. So it has got sub. So if you look at March, I was short some March upside. March 25, it's got to 5 vols. So I have been using that to cover my position, but I'll talk about that a bit more in a bit. The relative value on the skew side, this blue line of -1 is basically saying that puts have got a very slight premium on Ethereum relative to Bitcoin. And that makes sense, right? If we are sitting down near the bottom, near the local lows here, there is risk of a downside break, and that could lead to more weakness in Ethereum on a relative basis. So it kind of makes sense that they are willing to pay a little bit more for put protection in Ethereum.
Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com. I'll see you soon.